Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Tuesday, December 27th, 2022. Before I jump into the charts, just want to encourage you to please click like if you haven't already. Each and every time you watch the daily Tesla report or the daily Apple report or any content that we offer on our Wicked Stocks YouTube channel, subscribe if you would as well. That'll provide you notification each and every time new content has been uploaded. That includes the daily Tesla and daily Apple report. And starting next week, the daily NVIDIA report. So if you trade or invest in NVIDIA or are looking to or are interested in, you should check that out as well starting next week, first day of January. And finally, if you would share the content with friends and colleagues, greatly appreciated. Anyway, this is the first chart I want to show you, just kind of a big picture reminder, and then we'll work our way in. After an October 3 sell signal, for those of you who've been tuning in for the last few months, we had this channel support as a target that is presently in the 163.04 to 171.15 region all week long. This is a weekly chart. The daily chart levels are a little different. As you know, I'm going to be doing that throughout, actually. There's weekly chart versions and daily versions. I'll show that in a moment. But having settled a couple of weeks ago below this 163.04 channel bottom, set off yet another meaningful sell signal. This one, I anticipated about a 3 to 5 week sell signal down to this next more steeply descending channel structure that begins at 115.80 this week and ends at 104.10. All week long, these numbers are static. On the daily chart, and I'll show that in a moment, I've got 116.31, and that is the daily version of this channel bottom. It is meaningful longer-term support. In other words, able to contain selling through January. And from here, and in fact, we did not drop within 1% of it last week, but we came pretty close. And I'm not about to say that we should rally off of this yet. I think we're going to be spending more time down here this week. I think we'll probably test it outright, a 116.31 or 115.80 on the weekly chart. Probably dip into it a bit before presumably bottoming out for the month of January through the month of January. And from here, we can rally back into the lower 170s again over the next several weeks, 2 to 3 weeks, depending on volatility, of course. So that is kind of the big picture. And, you know, last thing I'll say about this image is, yes, if we do close this week below 104.10, it is a more vertical drop then. I think it picks up speed, if you will, to the downside. Price decelerate, not price deceleration. It's a descending price activity on an accelerated basis. How's that? I don't want to call it a crash, but it is a continued protracted collapse. And I think that if we close this week below 104.10, I'm going to begin pointing to the 23.36 March 2020 low as the next likely 2 to 3 month at the most target. In fact, that could be by the end of February, perhaps. So I don't want to rattle anybody's cage. I'm just saying what I see on the charts, and that's all I can do, right? So anyway, that's the big picture. And let's fine tune this just a bit. And I want to show you this chart here. 118.50 today is this channel bottom over the last 2 months that we actually did test outright, as I recall, last Thursday. We came close to testing it on Friday. It's dropping at a pretty decent rate, 118.50 today. Over the next few days, we'll converge entirely with this 116.31 channel bottom. And that is an area, 116.31 to 118.50, that can contain not only weekly selling pressures, but because it's representative of this long-term targeted support I've been mentioning about, quite possibly through January trade. And from here, we can turn back into the 160s, 170s over the following 2 to 3 weeks. And that image looks something like this. So there's your 118.50 channel bottom that I just showed. Here's your 104.10 to 115.80 weekly chart support that I showed at the top of this. So once again, slipping into approaching this long-term support area. And once tested, we can turn higher over the next few weeks. I'd say by the end of January, back into the 163.40 to 171.80, what is now long-term resistance area. And, as I've been mentioning recently, in terms of being a longer-term investor in Tesla, this is good bottom-picking territory, the 104.10 to 115.80 area, for anywhere, obviously, from day traders to 1 to 2 week swing traders, 2 to 3 week swing traders back up into the 160s, 170s. But in terms of being a longer term investor, I think this market really needs to prove it to us. And bottom picking this zone would not be, if you're looking to, let's say, buy Tesla, for instance, into later 2023, let's say that you're at least 3 months out or longer, you really want to buy on strength, in my opinion. And that would come with a, where are you? I know I included it here. That would come with a settlement right now above 172.55. So we have this long-term support area that we broke a couple of weeks ago, setting off another signal that I showed just a moment ago, and it is representative of long-term resistance now that can, if we retrace up to it, and we may, as I mentioned, coming off of 116.31 to 118.50 a moment ago, over the next few weeks, this area is in reach. And can absorb buying into later Q1. We can fall off from here again to new lows, perhaps. Once again, I know I'm spending a lot of time here on the big picture, but if we rally off of this long-term support area in the weekly chart, we can rally back into the low 170s. You can see you've got this line here as a 172.9458 Fibonacci that's not altogether different than this zone up here that I mentioned. So if you can imagine coming off of this support within a matter of 2 to 3, 3 to 5 weeks, by the end of January, we could rally back into the low 170s again and then fall off again through the rest of Q1 back down to this support zone. That is a real possible scenario that could play out. And this descending channel structure is dropping at such a steep rate that by the middle of next year, it actually already coincides with the 2336 March 2020 low. So back to the near term, all right, because I know most of you are turning in for day trade, and I just want to reemphasize here that holding above the 115.80 to 118.50 region, 116.31 on the daily chart, does allow the 160s, 170s over the next few weeks. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. So let's talk upside then on a near-term basis. One of the things I want to just sort of drive home right now is that for the week itself, you can see 143.21 is a 2-star resistance. It is this longer-term trend line that is projected off of the spring into the early summer lows. I think this is kind of April, May, as I recall. 143.21. Able to contain buying through the balance of the week. So I don't expect to see this level today, but we may see it over the next few days. And if we do test it, it can contain buying through the rest of the week, and we can fall off from here, back to new lows perhaps, back into this long-term support area. And at the same time, if we close above 143.21, then I see recovery over the following week or two into this 163.04 to 171.15 region. I don't think I show both of those on any particular chart. So it would just be basically back into this zone if we closed above 143.21. So that is the 1 to 2 week outlook. Now for the 3 to 5 day outlook. I already showed you this formation here. And I'm going to now show you, thanks for sticking with me, by the way, 129.05 is a descending trend line just off the October-November lows. And I show that as intraday resistance. Intraday mostly because we are sort of coming off of that long-term support area that today begins at 118.50. Keep in mind that we pretty much tested that channel bottom a few days ago. So we could turn back up to 135.25 over the next day or two. And on an intraday basis, if we happen to push above 129.05. So 129.05 intraday resistance, we could top out there possibly for the day and then fall back to 118.50. For you day traders, it's a 118.50 buy to 129.05 sell. and then buy again with a push above 129.05, then anticipating 135.25 on an intraday basis where we can place a daily high. And once again, this is a 3-week descending channel top that just might contain buying into later week. You never really know. It's a subjective call, but I do want to keep it light here because we're coming off of long-term support or longer-term targeted support. If we do close above 135.25, then we should tomorrow test that 143.21 trend line where we could top out through the rest of the week and fall off. And then once again, closing above 143.21 by the end of next week or sooner. More than likely sooner. I would say within 3 to 5 days, 163.04 to 171.15. And that is this weekly channel bottom that we settled below a couple of weeks ago, which is significant. Able to contain buying through January, possibly in a later Q1, and we can come off again from there. And not unless we can close above this zone at the end of any week. Am I comfortable then? That's the point I think I neglected just a moment ago. If we can close above that 171 area, and once again, it is on the daily chart here. Sorry, wrong chart. I know I'm throwing a lot at you here. This is our upward pivot region into later Q1. So yes, we can retrace up here, but we can also fall off again to new lows once testing this area. And so for those of you who are looking to invest longer term in Tesla, as much as I know we're testing kind of what I would call an intermediate support right now in this 105.11 to 106.31 region, it's good for a 3 to 5 week buy. It's good for a 2 to 3 week, 3 to 5 week buy back into the low 160s to low 170s. It's not really unless we close above this low 170s resistance. Do I think that this market can rally nicely then into later Q1? This is your long-term buy upon settlement above, buying strength, not bottom picking weakness at this juncture at least for Tesla. I think that pretty much rounds it out. Man, I'm 11 minutes and going here. My apologies. I don't like to go more than 10 minutes on these. So thanks for sticking with me. Please click like. I'll be back tomorrow with Wednesday's Daily Tesla Report.